It's just going to drive the price of homes up, in my opinion, even further, because if you can build 600 homes, but you're charging, like you said, like 3 to 5 times X what the actual cost is, and the developers, the builders, whoever's getting these contracts knows that, oh, this is a government project, we can drive up the cost of these goods, that's going to be passed on to the consumer, no matter how you slice it, whether it's through taxes or through increased home prices.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Hello and welcome back to the Ottawa Real Estate Podcast. My name is Paul Stevenson, and I'm joined, as always, by David Warren. We are both mortgage agents, level 2. David is the owner at Referral Mortgages, and we're here to bring you the latest and greatest in Ottawa real estate, Canadian real estate, and lately, seems like politics, Dave. It seems to be the real estate politics show. How are you doing? How's the week? What's going on over there?
Week's been pretty good. You and I were in Toronto for the Blue Jays home opener this past weekend. Did not go as planned, but was still a good time nonetheless. Yeah, kind of came back and back to it.
Yeah, we actually went to a comedy show this weekend, which was fun. It was a comedian that had been on America's Got Talent and on another comedy show that I watched. So pretty cool to see him in person. Small, intimate show, 40 people.
Mhm.
Carlton Place didn't even know how to a comedy club until recently, but it was a great time. We had a lot of fun. So we're back. Boys are buzzing. Round 2 starts this week in the playoffs. So lots happening lots of big things happening in a small town,
In the CP.
In CP. Dave, election coming up. Let's lots to talk about there. Lots of promises being made as per usual. Okay, as per usual. But I put together a little summary here of what each party is talking about. Obviously, housing. I feel like everyone probably knows this, but the key issues are housing, affordability, healthcare. Obviously, the trade wars currently happening, or the tariff wars, whatever you want to call it. And each party seems to be tailoring responses to kind of counter economic pressures and appeal to the middle class voters. It seems to be the vote of the middle class. You heard it here first. Okay? We're definitely the first to come up with that slogan, eh? So the Liberal Party, which currently is led by Mark Carney, well, I have kind of it broken down in different sections. So economy and taxes, housing, and then whatever else is important. So for economy and taxes, Mr. Carney is me and Mark are buddies. So I talked to Mark earlier today. He said they're planning to cut the lowest federal income tax bracket by 1% from 15 to 14, saving dual income families up to $825 annually, benefiting over 22 million Canadians. For housing, they unveiled an ambitious plan to build nearly 4 million new homes. Healthcare, they plan to continue delivering pharmacare and dental care programs. Boost salaries for Canadian Armed Forces members to improve recruitment. The childcare, they want to expand the $10 a day childcare spaces nationwide. And from a trade and foreign policy standpoint, they want to stand firm against U.S. tariffs imposed by President Trump, promising retaliation and emphasizing Canadian sovereignty. Conservative Party leader Pierre Poilievre, economy and taxes, so reduce the lowest income tax bracket from 15 to 12.75%, saving someone earning $57,000 about $900 a year, phased in over 2 years. Wants to allow an additional $5,000 in tax-free savings if invested in Canadian companies. Permit working seniors to earn up to $34,000 tax-free and extend RSP contribution age from 71 to 73. People are getting older, living longer. I think that's a good plan. Healthcare, pledge not to cut pharmacare or dental care programs. And let's see, trade, focus on Canada First for a Change approach, implying a strong stance against external trade threats like Trump's tariffs. And then last, the NDP, economy and taxes, raise the basic income tax exemption to $19,500 for those earning under $177,000. Double the Canada Disability Benefit to $4,800 annually and increase the guaranteed income supplement for seniors. Reinstate a 66% capital gains inclusion rate on gains over $250,000 to fund these initiatives. Remove GST on Canadian-made vehicles and essential items. For housing, this one is interesting, and I had a bit of a deeper summary on this. Offer low-interest, public-backed mortgages through the CMHC and Housing Corp for first-time buyers. healthcare, ensure universal access to family doctors or nurse practitioners, and fully implement public pharmacare. So those are kind of the main talking points that we're seeing. What are you seeing, Dave? Is there anything I missed in there?
There was one announced, I think it was yesterday, or the day before, comes to mind on that. It was the Conservative Party about the about capital gains. So you talked about NDP bringing back that thought of the um, inclusion rate being increased to 66%, whereas the Conservatives went the complete opposite way of kind of bringing in that reinvest back into Canada. Obviously, we're talking about kind of this argument of keeping things and investing within Canada, especially with everything going on with the States. But if selling stock or equities in a Canadian company and reinvesting in a Canadian company, that you're not having to pay capital gains on those gains. And it's as long as you're reinvesting back into into Canada. Now it's a little bit vague, so I don't know whether that's just specific to the equities market. I don't know if that's parlayed into the real estate market of reinvesting back into the Canadian real, because there's capital gains if you have a rental property or anything like that. So that I'm not sure of, but that's one aspect that was recently put out there as well.
I mean, that would be pretty massive if you could sell an investment property and reinvest into another Canadian property,
Yeah.
reinvesting in Canada or on a build project or whatever that looks like. But that would be pretty. I think that would accelerate. That would certainly help with new builds and things like that as far as the development. Now, what do you think about the $4 million homes pledge? Because I know there has been promises made over the last
Yeah. I think that
5
was what.
to 8 years, and I think we fell well short of that promise.
Uh,
So, what do you think of this 4 million homes?
I mean, I think for any of the parties, for any of the new home building initiatives, the challenge with them, and this is like, there was, I think it was 10 million homes that was promised a while ago as well, and different funds and from different parties. But we've never in history exceeded, I think, 260,000 new starts in a year. Uh, to get it up to 500,000 a year, as of right now, that's not possible. We don't have the trades to be able to sustain that. And we've never been able to historically been able to do it, regardless of how much money is thrown at it. So yeah, that I'm leery of, and that goes for all parties promising to, fuel the new home building or new starts, but perhaps dropping some of the permit issues or reducing permit costs, or kind of that speeding up the cycle. We've talked about it in the past of how long it takes to get some projects off the ground. I talked to some clients and it takes them 4 years to be able to get a project going for, a 6, 12, 18 unit apartment building. And it takes that long. They have to hold it some or even, up to a dozen years. So if some of those aspects are reduced or eliminated, then and money flowing, or grants or programs creating a fund that maybe perhaps brings skilled trades to Canada, or entices people within Canada that are already here to go the route of going into the trades, because we've kind of gone away from that push, and I know there was a little bit of a push more recently, but that's certainly an area where we can't build homes. We can't do any of this without the skilled trades.
Yeah, and that's one of the biggest things, like you said. I mean, incentives even for trade schools or for people to kind of get into that field, because yeah, I think during COVID there was kind of a push during the pandemic of with all the lack of builds that I think people were maybe considering it, but then price materials went up, people couldn't really afford to pay. I think the tradespeople, and that as the constructions have slowed, obviously the jobs in that industry have slowed as well. So I think ramping up that industry, ramping up the ability to become a professional tradesperson, you can basically accelerate that process. I know that the Conservative Party was talking about creating like shovel ready zones with pre-approved permits for major energy projects like mines and pipelines, obviously not homes, but that all it's kind of all relative, right? If you have these kind of nationwide pipelines and mines and things like that, then allows you to also transport goods and stuff a lot easier across country also.
Yeah, I mean, looking at this summary from CTV News, kind of to that, they, Mr. Carty for the Liberal Party kind of said that they would invest $5 billion
My friend
in
Mark.
that they would invest $5 billion in a new trade diversification fund to help diversify Canada's trades and create jobs. Again, like this is, and I think I said it last episode. I can't remember. All these conversations sometimes blend in together. But the biggest thing through all these promises that each party make, and it really doesn't, whichever party, really it's a two-horse race between the two of them, between the Liberals and the Conservatives. But whichever party wins, it's like just these promises, like follow through on them. These like don't have them as just like talking points, and also and whoever wins, like there's ideas from both camps that are very good. Like take some aspects from some of the other side as well, and don't just kind of have that division right down the line of we'll only implement what we came up with and that's it, and not look at the better good.
Yeah, I think this goes for all parties. It seems that they know exactly what we want to hear, and we tend to only hear it every 4.5 years, say, or 4 years. It's like,
Yeah.
oh, it's that time of year again where we got to tell them exactly what they want to hear and what Canadians want to see. It's just implementing them afterwards is what we really want. It's great to hear
Yeah.
it, but let's actually see it.
Yeah.
With regards to the home building strategy, so I dug a bit deeper into that this morning before we came on here. So the plan includes $25 billion in financing for prefabricated home builders using Canadian resources like softwood lumber, plus an additional $10 billion in low-cost financing for affordable housing projects. It says Carney's strategy also involves cutting municipal development charges by half for multi-unit residential housing, maintaining the Housing Accelerator Fund, and removing federal taxes on new homes under $1 million for first-time buyers. I think you mentioned that the Conservatives had said 1.3, I believe was what it was.
Yeah.
In contrast, his rival Conservative leader, Pierre Poilievre, blames the Liberals for the housing crunch and proposes eliminating the sales tax on new homes under 1.3 million while scrapping the Housing Accelerator Fund. With housing costs soaring, Toronto and Vancouver benchmark prices exceeding 1 million, and Canadian leading the G7 in household debt, Carney's plan seeks to revive government-led construction efforts reminiscent of the post-war era when affordable homes were built for returning veterans. Now, a lot of people, again, we're going down the political slide here, but a lot of people are feeling a bit uncomfortable with, even more reliance going into the government, especially when it comes to something like this, where it's very important, like we need these constructions to be done. From our experience, now maybe I'm just speaking for myself, but most things when they're government funded, government run, there tends to be maybe not as much production as quickly, let's say. So I think the fear would be that if it is run by, like if it's government led, these construction efforts, then it could just be like, although it seems like there'd be less tape, there might be more red tape, more, might actually take longer to do the bills just because of all the steps that are needed, the processes, the people involved, etc. So have you heard anything, or have you heard any kind of murmurs about the risk of doing that?
I haven't heard anything specific to this, but I mean, I think all of us we're in Ottawa here, and we hear everything to do with, politics more so than any other city in the country. But when we look at housing projects here, and you look at anything that they're looking at doing, the bureaucracy and the infighting, it everything gets stalled. Everything is slower. Everything is more costly.
Yeah.
Everything is more costly as well because they put it out to tender, but all these other companies know that they can just inflate their costs of what they're going to charge the federal government, and they just pay it. And we hear it and see it all the time from friends of ours that work in the federal government and procurement and other things, that the prices at which are charged are crazy of what the government pays. The same would go for for these housing initiatives. If they're leading it, yeah, they could say 25 billion that they've allocated, or 10 billion, or whatever it may be. Like it sounds like a lot of money, and that's going to go far. But when they're paying 3, 4, 5, 10 times what it should cost for each step of the way, that money isn't going to go nearly as far. I think they need to just focus on speeding up the process of being able to be shovels in ground, and streamline that at all levels of government, and create this fund, have a fund that incentivizes builders to build quickly, and
Yes.
to
Yeah.
with that land, whether that be single family homes, whether that be rental homes, whether that be low income housing, and covering all the different areas of need throughout the and demographic throughout our population. But I think incentivizing all the different private builders.
And fast tracking those permits, like
Yeah,
we've talked about it. The cost and the time it takes to get a shovel in the ground, even if you own the land, is you know 12 to 18 months. With the and tens of thousands of dollars just to get a shovel in the ground. So I think more than anything, I think actually fast tracking those permits and getting out of the way for builders to actually do what they need to do would be much more helpful. I think my fear with this would be, having the money allocated. And like you said, if it's going to cost, like it's just going to drive the price of homes up, in my opinion, even further because, if you can build 600 homes, but you're charging, like you said, like 3 to 5 times, or I think you said 6 to 10, but whatever the numbers are, X, what the actual cost is. And, the developers, the builders, whoever's getting these contracts knows that, oh, this is a government project. We can drive up the cost of these goods. That's going to be passed on to the consumer, no matter how you slice it, whether it's through taxes or through increased home prices. The only thing that could really save that would be enough inventory that it keeps prices low because there's so much inventory. Then again, it's our tax dollars are kind of being thrown out the window because, if it costs you 600,000 to build a home that's only worth 500, that doesn't help anyone either. So I don't know. I don't know what the result,
yeah.
I don't know what the solution is here, but
And it's not just to resale either for
right.
purchasing. Like even if building
For
a
rentals.
purpose-built rental,
Uh-huh.
well, if the cost is exorbitantly higher than it should be, that's going to be passed along in the form of higher rent, and it's going to just ripple through. Or low income housing, like well, if it costs a fortune to build, we're just not going to be able to build as many, and so we're not going to be able to you know help that population that's needing that type of housing. So I think that's the biggest threat I see to any of these promises or any of these funds is the implementation of it, and I think government needs to get out of its own way because all parties have shown throughout history that they haven't done a great job of being able to manage things like that and implement them really well. Like just create the funds, create the grants, drop some of the red tape, and let the greater population like take care of it as like private enterprise.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big. Protect what matters most. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction. At Galtin Poirier Avocat Lawyers, we love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you. For an effortless client experience that opens doors, call us at 613-744-4488 or visit our website at galtinpoirierlaw.ca. Let's get to the heart of your deal.
Yeah, so I actually great segue there, Dave. I have this chart. So it's from WOWA.ca, WOWA.ca, and it shows a Canadian federal budget as a percentage of GDP. So it actually goes back to 1966, right up until today. It has a list of all of the prime ministers, both short-term and long-term prime ministers. It shows the budget surplus or deficit, and it actually has a summary of how much federal revenue we brought in versus the expenditures of each individual government, which I thought was when you look at it, obviously very visually stimulating, which I love. Lots of bright colors and words, eh? But the data on it's incredible. If you look at just for fiscal year 2024, your federal budget shows $459 billion taken in, and the federal deficit increased by 61.9 billion, which was 12% of the budget. So let's see, 47% was from personal income tax, 18% from corporate income tax, 11% in GST, 6% in EI premiums, and 17% was from other revenues. On the other side, on the federal expenditures, 521 billion, and that went to benefit payments, so OAS, CCB, and EI. That was 23% of the federal expenditures. Provincial and municipal funding, 19%. Targeted support programs, 18%. Government staff expenses, 14%. Debt interest cost, 9%. So 47 billion in debt interest cost. And then other expenses, 16% for 85 billion. Is anything in there stand out for you, Dave, other than obviously the spike during the pandemic in spending? But aside from that, is there anything in there that surprises you or that doesn't surprise you?
I mean, it does and it doesn't at the same time. But the benefit spending of being the number one at 23% of our expenditures, but how it makes sense with an aging population that would be the highest cost. Yeah, that to me that's the biggest. That's the interesting one that jumps out to me. And one in which you can't reduce because people, like we've obviously promised those payments in the form of people have, basically had, CCB and EI removed from their pay and they've paid into it for future. And that's supposed to be self-funding, being that it's, supposedly, invested and gained interest kind of thing. But how that's going to be and how that's going to grow as far as a percentage of expenditures as the baby boomer population continues to age, and you said at the beginning of the show, people living longer as well. How that's going to grow. But yeah, that's one that stands out. That really stands out to me. And then on the revenue side, 47% being personal income taxes and 18% being corporate is interesting as well. Why that corporate number is so low, and is that because we've made things where people have just moved their headquarters elsewhere, or why is that corporation figure so only at 18%?
Yeah, the one thing that did stand out in there was the fact that we basically almost exclusively run in a deficit. Like there's been a few years there from 2000 to 2009-ish where there was a slight surplus, but otherwise, the majority of the last 60 years, we've been running in a deficit. I think there's about 12 maybe of those 60 years that we've been in a surplus. So
in that chart, it was basically, it looked like 3/4 of Jean Chrétien's leadership was surplus, and then into about half of Steve Martin's was a surplus as well. Stephen Harper rather.
Yeah, Stephen Harper.
But yeah, so I mean, I thought just seeing that from a visual standpoint, when you're talking about deficits, that's kind of interesting that period of time between two different parties, the Tories and the Liberals, and it running at a surplus for that period of time. It's
and the last thing I wanted to talk to, Dave, good news on our side, something we deal with that, isn't often talked about, but is mortgage fraud. Mortgage fraud is something that is, I think one of the leaders as far as money laundering and things like that as well. Is it's a lot of things come through real estate. So we always, we go through training. We have to have our eyes peeled for different types of mortgage fraud. But this article from Canadian Mortgage Trends says that mortgage fraud falling overall, but rising among first-time buyers. So I'll give a quick summary here, and then I have an interesting chart that I wanted to share as well. So it says, according to a recent article on Canadian Mortgage Trends, mortgage fraud in Canada has declined overall, with the national mortgage fraud rate dropping to 0.2% in Q4 2024, a level not seen since Q2 2022. However, new data from Equifax Canada indicates that first-time homebuyers are increasingly contributing to the remaining instances of fraud. Specifically, consumers without an existing mortgage, many of whom are prospective first-time buyers, were nearly twice as likely to commit mortgage fraud compared to current mortgage holders. The report highlights that falsified financial documents remain a significant concern in mortgage application fraud. In Q4 2024, falsified financials accounted for 30.2% of mortgage fraud cases, up from 28.2% in Q4 2023. Misrepresentation of financial information, including fake pay stubs, employment letters, account statements, tax slips, or false down payment information, accounts for over 95% of fraudulent applications. Despite the overall decline in mortgage fraud, Alberta, Ontario, and Quebec continue to report higher than average rates compared to other provinces. The data underscores the importance of lenders focusing on verifying financial documents to mitigate fraud risk, especially among first-time buyers who face affordability challenges in this housing market.
I think for first-time homebuyers, kind of still driving that. I think that just is from a place of desperation of those first-time homebuyers from a qualifying perspective, and just not, really just coming down to income versus debts, and they just not having that income, that they think that, mortgage fraud can be from falsifying documents to like just, inflating your income, and it not, that perceived income. Like it's, some people think it's like could be grossly fraudulent of providing tax documents, but then as little as like just providing a letter of employment that has like guaranteed hours versus the fact that they actually have fluctuating, would be considered mortgage frauds.
Yeah, so this chart here shows a distribution of fraudulent mortgage applications across different types of fraud. So it actually shows a chart, and it kind of has a color-based and 3 quarters. So Q4 2022, Q4 2023, Q4 2024, and it breaks it down between like falsified financials, conflicting information, falsified income, falsified employment, third-party fraud, account abuse. So there's a whole chart here. So anyone who's listening, if you're interested, this comes directly from Equifax. So it just kind of gives a breakdown of the distribution of fraudulent mortgage applications, which I thought was very interesting. At least for me, at least for us,
Well, and for anyone listening that has gone through the mortgage application process and finds it very document heavy, it's because of real estate, like Paul said just a moment ago, is the number one source of money laundering within Canada, and is a huge source of fraud. And so really for us, and for when you're dealing with hundreds of thousands of dollars on a single transaction, when asking for not just a letter of employment and pay stub and some tax documents and bank statements showing that deposits, is because of exactly that, of the different types of fraud that people can commit. And it's really just looking at various data points on an individual, because someone might think to, alter a letter of employment, but they don't, but they're not thinking about the pay stub. They're not thinking about things matching up with deposits into their account or matching up on a T4 or an NOA. And so when you have all of those, that's where, on our side and the bank side, when they're verifying and vetting all these documents, that's what we're also looking for, is, we're relying off of just PDFs that are being provided. And in today's day and age of technology, can be doctored, but they go so far as doing employment checks. Like they will call the individual that signed that letter of employment and call and verify that they wrote it, what's found within it, and details, just to see if there is anything off. So when you are asked for, kind of the whole, the entire kitchen of documents, then that's the reasoning why.
Yeah, and that's a lot more common. Like it's not uncommon for us to provide, like you said, letter of employment, pay stub, and then maybe they want the T4 from last year or the year-end pay stub from last year to see what the actual cumulative total was for last year to match the T4, and then they make the verbal confirmation. So, we have to kind of advise clients up front, like, listen, there's like, we're going to need all of this information, and the lender can also ask for additional documents, which they typically do. So, we try to gather as much as we can up front without being overly intrusive, but also explain to clients, like, there's very likely going to need additional documents needed, but this is the base. This is kind of like the foundational information I need just to get accurate numbers and properly advise you, Well, Dave, I got 3 mood boosts for you today, and I think it's time for us to just slide in.
Boost me.
Yeah.
Boost me.
So here we go. Number 1, what did the mama cow say to the baby cow? It's past your bedtime. Good one. Always love a good cow joke. Number 2, what do you call a factory that makes good products? A satisfactory.
Wow.
A satisfactory, yes. And getting back on the cows here. Number 3, the other day a man assaulted me with milk. How dare he?
Wow.
That one's
Wowza.
amazing. How
Wowza.
dare he? Thank you, everyone, for tuning in and listening to Dave and I rant about pretty much everything we think is, I don't even know. Thanks for listening. We'll be back next week. And thank you as well, always, to our sponsors, amazing sponsors, Gertin Poirier, Avocat Lawyers, real estate lawyers located in Beechwood. Great team over there. Big Insurance in Westboro. You can ask for Brian Powell, amazing insurance agent, and Centum. Centum is the network that Dave and I both work under nationally, and it's an incredible group of people. They have over 2,000 agents across the country, and we're very happy to be partnered with them. So thanks, everyone, for tuning in. We'll see you next week. Deuces.
Deuces.